So everyone's heard the term buying the dip. What on earth does it mean when you hear the term buying the dip? We're not only going to explain what that means exactly, but we're going to give you real life, live examples on how you too can buy the dip. Let's get right into the action here. Sean, give us a first example. How can we buy the dip?
Perfect. Yeah, look, let's start buying the dip. I mean, first of all, you got to figure out that you want to be long a certain asset, or in this case, I have the triple Qs, which is going to be the NASDAQ 100. And how you sort of identify, what position you want to be in is just going to be by the trend line, right? I mean, this is a 50-period moving average just going upside right here. So we could see that. We definitely know we want to be long this NASDAQ. It's just made a monster move, obviously, off March 2020 bottoms straight to the upside right here. And then you want to kind of look for when dips happen, what do we look for in order to get in, right? And I think some of the first major pullbacks you want to look for, volumes at the bottom. I'm not really going to go into that too much right now. I'm going to go into this last dip that just happened because it's going to be fresh in our minds here. This February of 2021 dip where the NASDAQ had just made a brand new, fresh all-time high. So the Qs go up to about 340, 338 or so, and then this begins to happen, and you start to fall back down almost, 10, 20% here from 340 back down to 300. And what I'm trying to look for is, okay, I want to get long, but where do I start building the position? All right. What I actually look for are previous highs. So when you see this actually worked out perfectly here. So you crack through the 50-period moving average. Normally, this is a good spot to start beginning to buy the dips. But then as that happens and you say, uh-oh, it's going lower and lower and lower. Now, we can't recommend averaging in because if you average in all the way, then, back here, who knows how far down this could go. This is how you lose a lot of money, averaging in and then nothing comes back. So what you're actually looking for is, where do I know when to possibly begin to load up? I know I want to be long the NASDAQ. I know I want to be long into this dip. So where do I find it? Well, all I do is sort of extend back and try to look for past previous highs. So right here, we have a previous high back in September of 302, tested again in November, so we know they're pretty legit. Both of those highs gave us pullbacks, then expansion, pullback again, expansion. Triple tops generally don't hold, and that's true again. It doesn't hold here, and we start to move to the upside. So, all right, so I'm caught long. Where do I buy? I would say the first area of concern for me would be this. We extend this line out back to 300. This, to me, is where you buy the dip, okay? And then if this goes rotten and sour for you and continues to fall down, then you can sort of look for resistance levels or support levels at this point was resistance, back down to support. Where is the next level of break where we know we're going to be wrong? I would say you don't average in past the bottoms of the past dip. So we dip back in here, we don't hold, then that's where we get out. So for me, this is a great buy the dip opportunity. We made a new high. We know the trend is our friend. The trend is long. We go through some turmoil. Where do you buy? Look at past highs as an indicator.
An absolutely fantastic example there, Sean. And I want to start with something that's not as easy of a trend to be able to find. So we're going to jump into a daily chart here, and I'm going to show you forward. Now, obviously, look, the stock has been heading to the upside, and you can look here just over this chart. You're going to see a general uptrend, but this 50-period moving average has been broken once to the downside, and then another time to the downside. Now, I've actually eliminated the last session, so you can't see that candle here, but what you finally see is a couple of attempts to break back above that 50-period moving average, and then the last one resulting in closing above it. So a lot of times that's going to signal a bit of a turn in a trend into a buy. So the question becomes, okay, now that it's closed above, how do I buy the dip or any dip that might actually happen? So what you're going to want to look for here is find an area of support. So I quickly move from my 1 day into a 15-minute chart. So we do get that close above the 50-period moving average. And then I come in on this fresh day and I ask myself, how am I going to execute in? This is a real candle that happens off of the open. We're at about 1275. It comes all the way down into 1250. The previous close was 1249. That's right into 1250. And this is where buying the dip you have to have confidence in the first thing that I showed you, which was you've broken that 50-period moving average. You've now predetermined that you are biased towards the long side, and you are looking to buy on any weakness. A lot of times when a stock will gap up or make a move up, you will see movement to the downside at the open. Sometimes it's profit taking. In this particular case, you look to a couple of levels that you can have for support. One of the obvious ones is an entry area around that 1250s, which ends up going through. You're never really tested to previous support, which would have been the following session, down to 1230. This is where your stop placement is going to be. And this is the key thing here is you can decide to have an area stop if you want, where if 1230 breaks, maybe you give it to 1225. I think that's one of those things you should always back test yourself. Know your own risk tolerance. Know what slippage any particular symbol might have. Ford is incredibly liquid, so you're likely to get within a cent or two of your targeted exit point. So you don't have to worry about that extra 5 cents with Ford because there's plenty of liquidity unless you're trading millions of shares at a time. So that's a situation where you're anticipating a dip. Your bias is to the long side. You're going to get in as this moves down and everyone's panicking off of the open. Now you have to ask yourself what you want to do when it comes to the upside in terms of getting out. One of the smart things I always like to look at is just think about what the actual move is from this 1250 into that 1280, which was the pre-market high. That 30 cents is usually going to be around where my first target is going to be at 1310. From there, you can either use something along the lines of that next 30 cents to the upside, or you can use those even 13, 1325, 1350, those sort of quarter strategy to be able to get out of your trade. But the key is that you were anticipating a dip on profit taking, and you already had that level that you wanted to buy into. You knew what support was going into it. The downside of an aggressive strategy like this is if there's no profit taking, there's no dip for you to buy. But when it happens, man, is it good.
Let's talk about catalysts here. We saw two great examples there of directional moves on a higher time frame. Then we go down into the intraday time frame and identify any kind of dip that we can buy, where to get in, where your risk is, and how to then manage the trade. What if there's positive news catalysts surrounding a stock that can in itself be simple enough to want to buy a dip? In this case, I'm going to show you Boeing from today, in fact, up 3% here on positive news that we got in the pre-market here. You can see it was doing absolutely nothing this morning and then just popped up in the pre-market. This is 9:30 when the market opened, so we were already up significantly at the time the market opens. When the market opens, we get a nice move all the way to 236 here for Boeing, still up 3%. But look at this level. We had a very, very clearly defined support level in the pre-market where buyers were stepping in and keeping this above 232. What happens after this initial move? Yeah, we pull right back into that same level, 232, and that's when buyers start to test the waters. So 1, 2, even 3 times we get buyers testing the waters before we get a nice move back higher. So as Neil was mentioning, let's take this example to start with. There's a really tiny candle here where if we use the high, and the reason we do this is because you're defining your risk. You know that either this low is where you have to get out, and I'm talking about this candle here as your stop, or you can give it down to this prior support, where this candle right here ends up testing. So 231.90 is the bottom there. If you bought above, clearly defined risk below, you get a nice multiple dollar move into profitable territory. Now, that we know how to enter a trade on buying the dip, let's talk about how we get out, guys. If we're in now a long trade, say on a trend moving in one direction, where on earth are we planning to get out of these trades?
I think one simple thing you can look for is maybe a trend break. And I'll use a different chart just so you can quickly see here. Because not to be too long-winded, getting out of a trade is for profit is usually going to be an easier thing to do than how to cover losses. So, if you happen to be in an upward trend, and clearly just using Virgin Galactic, there were some nice dip buys. The example you used here, where you get that eventual break and a candle closes higher, you get in and now you're working into the money. What I would simply say is you find a previous high like this, like a 20.95 right at this level. And you're deep in the money, about 40 cents here, depending on the exact entry price. And when it retests it, if it breaks that 95, that can be your trail. And that's one of those simple things where you have a previous resistance level, and then you have a bit of a support as it goes. If it breaks to the downside, that's going to be your trailing out. If you then let it run to the upside here, you can then just repeat that process over and over again. It breaks, tries to hold a new high, you trail it back into there, and then when one of these is violated, that can simply be your out. In this particular case, you're going to be holding on to the trade until it finally does not repeat that pattern. You're not going to get the high of the day that way. Eventually, you're going to get a break of support, but it allows you to have more of the move. Now, of course, if you're day trading like we do on our show, we also have to be flat by 4 o'clock, so you could just get out then.
Yeah, I wanted to look quickly at Peloton, and I think that we did have some negative news, obviously, on Peloton recently. And you can see right here some issues, areas of concern here at 103, 104. And what you're going to notice is you can find, this is at April 26th, you can find opportunities to buy, on negative news. And I think there's a good example here, bouncing off, like as you can see, bouncing off key levels, bouncing off 100, things like that. So when you're looking at 100 up to 104, there's a couple of examples of highs being 104 here, things like that. So bounces off some of these bottom levels, 97, 98, back up through 100. So you do want to look at levels of stock that, hey, if you're near those even dollar levels, 100, 50, 1,000, 500, things like that, you can also play off some of those levels and look for explosions back to the upside, buying dips through. So a break through 100, maybe you get a 99, or in this example, 97 bids, and then you can explode to the upside on some of those breaks back up. So you already see a past bottom here of 97. So when you come in the next day in the pre-market and you see a 97 bottom there again, this is probably this is buying a dip, right? We go from 104 all the way midday to 97. Ignore what happens. You come in the next day and you're like, I wonder if Peloton will rebound. Well, what you can look for is that bottom from the previous day, buy this dip down in here, and then you can get it through 100 back on the upside. So look for key price levels as well, Brendan.
So identify a trend, some sort of catalyst that has the stock moving in one direction. It doesn't matter what your time frame is. Once we understand the directional bias behind a trade, then we look for the dip to buy. We gave you great ideas there on how you then can enter by buying the dip. Let's go to Valeria.
Hey guys, thank you for this great information. Dear viewers, please subscribe to this channel to see more videos.